Hi there. As you can see, ZIM is up over 60% year to date. And they again are paying a dividend over 6%, as you can see here. But do you know why ZIM went up so much? Over 60%. And then more recently down over 27%. Do you know why? If you know the answer, you are great. This business is quite easy to understand. You look at the stock price here, you see this upside, and then you look at the freight rates for the last 2 years. As you can see, when rates have started to go up from 1,000 to over 5,000, also the stock price went up. Look here, over the last 2 years. It went up over 150%. And then if you look at this recent decline from $25 back to $18, a decline over 27%. So pay close attention to this, because if you look at the freight rates, same thing happened. They have declined from $5,500 to $3,000 and almost $800. So, as you probably know, or you see right now, the stock price depends a lot on freight rates, especially on this index, Baltic Index, the global index. So once you understand this, you are able to value this business and assess if this dividend is sustainable over the long term and if you can make some money with ZIM. So let's start the analysis. Look at the most important indicators, how much you can make with this company, and then the valuation. When is the right time to invest in this company? By the way, the valuation will be in another video. If you want to see that valuation, you have to join my channel. That's premium content, only for members. So let's dive in. You can see that the revenue or net income has increased a lot in the last quarter, as you can see here. The volume is about the same, only a small increase of about 10%, but the total revenue and net income went up a lot, from a loss of 200 million last year, second quarter, to a profit of almost 400 million. Same for their revenue. It has increased more than expected. And this happens because when ZIM can charge for higher rates, they are able to make a profit. So that's why you see that increase in their earnings and they're able to pay the dividend. But this is not all. ZIM is also investing in other companies, small companies that may become a winner in the long term. So they not only invest in their ships, infrastructure, they also invest in small enterprises, small businesses. As they've made a lot of money in the past, because if you look at their history, you can see the revenue went up to 12 billion and they were making over 4 billion in net income. They paid a dividend from those earnings, but they also invested in their ships and in other companies, small companies, which have potential for high returns in the long term. You never know what will happen. Then, as I said, they've also invested in infrastructure in their vessels. By the way, you have to be very careful. You see that ZIM has 148 vessels. And if you look at their balance sheet, you can see that, let me show you here, the total assets are over 9.7 billion. And you compare this with the market cap, it's quite a lot. You might say this is a bargain. And also look at the total liabilities of 6.8 billion. They are still left with some cash. But be aware that those assets, especially their vessels, are not their vessels. They are chartered or rented, leased, what word you want to use. Here, we can see here, their current capacity is 148 vessels, of which 118 are chartered vessels, as you can see here, and only 14 are owned by ZIM. Can easily see here in their presentation, if you read this small text, of course. That's why you don't have to rely on their assets or what they have on their balance sheet, their cash. You see this, cash, out of cash, and you think that you are protected. Don't do that. Focus on their earnings. This is what really matters. And if you want to focus on their earnings, you look at their freight rates when they go up and down. So you see a lot of charts. Those are not important. Focus on the real indicators, which are their debt. As you can see, their debt has increased to 3.2 billion. Their net debt, by the way, they have 2.3 billion in cash, and the total debt is around 5.5 billion. And you subtract from their debt the cash position, and you are left with the net debt, 3.2 billion. Be aware of this. You look at the market cap, you see it's about 2.2 billion. So, if something bad happens, God forbid, those rates go down to less than 1,000 and they stay low for a longer period, that will be a huge problem for ZIM. Because they will cut the dividend, and when they do that, the stock price will go down to $7, as it happened in the past when they cut the dividend in 2023. Maybe you remember my past videos when I said that the dividend will be cut, and that happened. And here, the same thing will happen. The dividend will be cut in the future. First of all, they will start with a reduction in the dividend, and then if rates stay low for a longer period, they will cut the dividend. So be aware of this risk. That's why it's important to know when to invest in this company. You can make some nice money. As I said, you can double your money, or even more than that if you are lucky. This means that rates have to go up a lot, as it happened in the past, back to 10,000. If you are lucky enough, you may have a 6x on your investment from ZIM. But if rates stay low, because if you look at the past, the trend is that the rates are around 1,000, 2,000. And the right time to invest is when you have that opportunity. Take advantage and wait for this increase in the freight rates. When that happens, also the stock price will go up a lot. So it's easy to do that. But of course, the hard part is to predict the freight rates. As the management said, if you read their presentation, here the CEO said that they expect their results in the second half of 2024 to be better than in the first half. As they signed new contracts with those high freight rates, they are likely to make more money in the second half. That's obvious. But then next year you have to be aware of that, because if the the demand goes down, also their earnings will go down. Then you can see here that this demand was driven by supply pressure from the Red Sea crisis. As you know, there is that war in Israel, and those rates went up a lot because of that conflict. But when all those bad things will end, also the freight rates will go down. So you have to be aware of this. It might happen this year or next year. That's why don't have to invest at the highest peak when the demand is high. Invest before the demand goes up. So you also need that patience to wait and predict the future, what may happen. So that's it for this video. And if you have other questions about ZIM, let me know in the comments, and I'll see you in the next video with the valuation.